All right, guys. So, what if I told you you have two borrowers, two home shoppers who are buying a house? They have the same type of loan, it's the same house, and they bought at the same time. But one of those buyers saved $80,000 over the life of the loan. Keep watching, and we're going to talk about how you can save just about that much money. All right, guys, so we're going to get right into it. Make sure you like and subscribe to the video, and let's talk about how you can save $80,000 over the life of your home loan. Now, Realtor.com and LendingTree have come out with some research last year that talked about how people who went ahead and shopped around to different mortgage lenders saved themselves over $80,000 throughout the life of their loan, their 30-year fixed rate mortgage, by talking to more than one lender. Those who talked to just one, they pretty much did not get the best deal. Now, the reason why that is because most people, when they go out there to buy a home, they get a referral from a realtor like myself, from a family friend who used this mortgage lender, or just someone they may have seen on TV or online, right? Rarely do they actually stop and comparison shop when it comes to different mortgages, because they think, hey, this is what my income is, this is what my credit is, this is how much it's going to cost me to buy this house, not knowing that not all lenders offer the same thing. So those who shopped around saved that money because they were educated and they understood that just because someone quotes me this much per month doesn't mean that that's the end all be all. There's more to the story. Okay, so if we dive a little deeper into the LendingTree research that was conducted, what they did was they looked at the highest APR mortgages and the lowest APR mortgages, and that difference was about 1% in the APR, the annual percentage rate, right? That small 1% in the APR saved people about $222 a month, $2,600 a year, and over that 30-year time frame with the fixed rate mortgage, it saved them about $80,000. So those are real dollars, right, that people save just by doing one thing, and that's talking to more than one mortgage loan company, right? There's so many things out there that people don't understand about buying a house. And one of those is that you can talk to more than one mortgage lender, so you can compare and contrast what are the positives, what are the negatives, and how can you get the very best mortgage rate, right? And as we dive deeper, we're going to talk some more about what other things you should look for. But I think right now, most people are already convinced I need to talk to more than one lender. That's $80,000. Not to mention, what can you do with an extra $222 a month? And what could you do with an extra $2,600 a year? Just those small incremental differences there, I mean, they can make a world of difference. So what might be your next natural question is, well, why are there differences between these mortgage lenders? Why would I go to one mortgage company, put in an application, and then go to another mortgage company with the same information and get two different outcomes? Well, that's because each company has their own operating models. They have their own access to capital differences. They have competition in different markets. There's so many levers that are at play that might make one company say, hey, you're paying X amount per month, and another company saying you're paying Y per month. There may be different programs that they're running or that they don't run. There's so many different nuances that people just don't understand, right? So the biggest ones you can take with you are competitiveness in different markets, operating models that these companies have, and different lending guidelines that each of these companies have to adhere to. So those are the biggest ones as to why you may say, man, I might have a 1% difference in the APR between this company and this company. Well, that's why. Now, one really, really important point is that all of this data is based off of the 30-year fixed rate mortgage. Now, a lot of people might ask, Bert, why should I get a 30-year fixed rate versus an adjustable rate mortgage, right? The adjustable rate payment looks great at the beginning. It's not predictable, right? The fixed rate is fixed. Your payment is not going to change. And if it does, it's because either there's some small changes in taxes if you purchase a new construction, or on the better side, rates have improved over time and you can refinance into a better mortgage rate and have a smaller payment. So one of the things that I really tell people is that to really look at that information over a 15-year or adjustable rate mortgage just depends on your situation. But what you need to know is that this data from LendingTree is based off of the 30-year fixed rate mortgage. And why should you have one? Predictability. You want to be able to know every single month until you're ready to sell, how much am I paying? It's very, very powerful. Now, if you watch this video, you're ready to go put in mortgage applications, and you know that the APR is important when you go and you comparison shop. Well, some of the other things that I want you to look at are lender fees, okay, closing costs, or what kind of closing cost incentives does the mortgage company have? Points, what kind of points are they charging on the back end of the loan that may cost you? Okay, and also look at what other programs does this mortgage lending company have that can help you have a short-term reduction in your payment, or can bring you a grant towards your closing costs or down payment. Sometimes it's not all about the rate. Even though we know we want to save $80,000 over the life of the loan, there may be a situation where a short-term higher APR or a higher APR at closing means you get a short-term benefit to getting across that mortgage table, that closing table, and you can save money in your pocket right now and use that to retirement or to fund your new home or things of that nature. So always look at the other factors that are involved, but the most important thing is those who shop around, they get the very best deal. So if you're out there and you're looking to purchase a home, reach out to me and I can get you a couple of different mortgage lenders that I'm working with right now, so you have the best option in front of you and potentially could save $80,000 over the life of your loan. So if you have any questions, or if you shopped around when you went to go buy a house, let me know in the comments. Make sure you like and subscribe, and I'll see you guys in the next video. Bye.